Joining us right now, Rohit Anand, the Global Head Business Finance at Tech Mahindra on the show. Rohit, hi, good morning. Great to have you on the show. Rohit, as we wind down to 2021 and almost closing in on 2022, wanted to understand what are the initial signs that you are getting from your clients with regards to IT spends and whether or not they're likely to be higher in 2022 as opposed to what they already were for 2021.
Yeah, great. Good morning, everybody. Glad to be on the show. It's the time for the year for us where we, reflect on how the last year's gone. We look at, what the customers are thinking for next year. And we've had those discussions with most of our customers as we start planning for the next financial year. So maybe I can give you a few trends and what we've been hearing. I think from a spend perspective, most of the articulation done by customers bullish. People are talking about continued transformation on the IT side. They want to get their operations more agile. There's continuous focus on getting their platform into the cloud network, make it more agile, develop applications which enable cloud enablement and faster transformation of their business in terms of outcomes and results. So those are broader trends that we're seeing from a lot of companies. There's also penetration of 5G. As you know, we're heavily entrenched in the telecom sector with our legacy and history. So there again, we're seeing a lot of positive discussions with the customer where they're adopting the 5G technologies at different levels, be it an OEM manufacturer, be it a, CSP provider, or even enterprise customers where 5G as a technology can be adopted in different spheres like healthcare and manufacturing to enable better outcomes. So we're participating in those discussions. We are actively working with those customers, and the rhetoric for next year also looks positive as we enter into the next year.
Okay, Rohit, you preempted my next question on 5G, but good to get in that clarity. Also wanted to understand how the deal pipeline is looking right now and whether or not enterprise side of the business is also seeing the kind of traction and better realizations, if I can add that caveat as well.
Sure. I think what's been good for the segment at large and for us is we've seen, if you look at last few quarters, we've seen pipeline and large deals as well as revenue acceleration, both on the communications of the telecom side, but also on the enterprise side. So it's happening broad-based for us. If you look at the future, the pipeline on the enterprise segment is also looking very positive. We continue to have good discussions with a lot of key customers. If you look within the enterprise segment, we've spoken about our key verticals, where, I can talk or give you a little bit of flavor on how we're seeing those pan through for us. The big ones for us is BFSI, where we're closer to $1 billion run rate there. And, we've grown over the last few quarters. The deal pipeline is looking nice. The future momentum is with the business from a tailwind perspective. And we're having a lot of active discussions. So that's in a good space for us. When we look at second big segment for us is manufacturing. As you know, we have a legacy of good manufacturing customer penetration. There again, there's a massive transformation in the manufacturing industry. If you know, COVID obviously impacted manufacturing in a big way, both on the supply chain side as well as other disruptions. So with that, I think the technology and the supply chain transformation is currently happening, and we're participating very actively with our customers. From a technology transformation perspective on manufacturing, there's a big move from mechanical manufacturing process orientation, from a productivity of a machine to moving into software. So embedded software, IoT, as you would hear from a terminology standpoint, artificial intelligence, machine learning. All these terminologies that you would hear is gaining traction because more and more intelligence in the machine is getting through software. And our pipeline, our deal volume that we're seeing is coming in that space. And we built a lot of focus within our team to continue to add that domain and take the market leader position as we move forward. So from a vertical standpoint, those two are big, and the upcoming ones which have grown tremendously for us is the high tech vertical. We've been working with hyperscalers on their cloudification journeys with various customers. So we've been active participant there in partnership with them. We're also working with product engineering companies which are developing and spending a lot on new products. And then the third is the new unicorns, right? We wouldn't have even heard the names, and the companies are becoming multi-billion dollars in the span of 2 to 3 years. So we're actively engaging with them early so that we can be a part of their transformation on all the areas, including IT, engineering, BPS, etc. So those are the big segments for us. And then we made active investments in the healthcare space on the provider side. So that again, we're seeing some positive momentum as we enter into the next year.
Rohit, Alex joining in as well, and certainly your investors will be listening to you and will have grins on their faces because you're painting a really good picture in terms of the demand scenario. But on the other end of the spectrum, your employees and indeed a lot of other IT engineers are also looking at you and grinning because they are perhaps the most in-demand professional in the country right now. Certainly a headache that you've had to deal with as a business in terms of how to keep that talent. Have you reflected as a business as to how you're going to approach this problem next year?
Yeah, you're absolutely spot on. We've had, active discussions on the supply side. As you know, if you look at the current environment, it's as you rightly put it, it's a positive demand cycle, which continues from last year into coming year. With that, there's an excessive amount of demand of talent, and it varies across the skills. But overall, you see that momentum on the supply side as well. With that, we've taken very active initiatives. If you see, last quarter, we've added 15,000 people to our employee base. That's the biggest ever addition we've done, which shows, how we're focusing on increasing the employee base as well as adding the skills that we need, looking at the future demand. So that's an area that we're focusing. And, areas beyond that, we've done some acquisitions as well, where we have capabilities on nearshoring, not just offshore. So, areas like Mexico, we've got strong presence on the cloud side. So we've done acquisition, which gives us that presence and we're adding on to it. Similarly, some other territories. And even within India, I think we're focusing a lot on developing the tier 2, tier 3 cities. We've expanded on, Coimbatore, Nagpur, Chandigarh. So we're doubling down on some of these cities where we can add more talent pool. Obviously, work from home has been the trend that we've seen. That continues and gives us more access to talent in smaller cities. That's obviously an enabler. So from our perspective, a lot of focus on getting more and more access and tapping talent, be it within different cities in India, nearshoring centers, and then within the employee base, giving access to people on upskilling, giving them the platform to keep on adding more skills that are in demand, based on the pipeline that we see, and hence enabling them to get better utilized as we move forward in the growth journey.
Okay, so and follow up to that is, would you expect attrition levels then to come down? Where do you see them settling at? And the other factor, of course, is given that this cost base is going up, of course, on the other side of the spectrum, demand is good, so therefore you can pass on some costs. The question is, will you be able to improve? Is there room to improve margins from where they are at around 15%, or do we see more of the same?
Yeah, so maybe I'll break it into 2 points. First, attrition that you asked. So from an attrition standpoint, we see a industry-wide increase that happened over the last few quarters. I think our view is that trend has moderated. It's stabilized at a particular level, though it's still high versus the average we've been used to as an industry. I think that stabilization is the first good positive step because it's not going in the increasing trend. So that's where we are. We feel, it's with all the actions internally we're taking as a company, it will gradually go down, but I think the elevated levels will continue. So hence we're working towards that. From a margin standpoint, we'd articulated at the beginning of the year, looking at all the headwinds and the tailwinds, that we will execute towards framework with gets at a positive 15%. You see the first 2 quarters, we've been maintaining or exceeding that. And as we look at the next few quarters, we hold that position. As we enter into the next year, the supply side challenges continue, just that we're better prepared now because that trend's been there for a few quarters. So as all the actions that I explained to you on our internal, external front, we're forecasting and getting the skill appropriately mapped to the demand cycle, and ensuring, to your point, having the right pricing to enable the margin sustainability as we move forward. So I think these are the headwinds that will continue as we move forward, but we have enough tailwinds to keep on working on from a margin standpoint to continue our journey over a longer term period, which we've shared with our investor and analyst base a month back on a continued margin actions, be it automation and other areas, including getting productivity in our supply side.
Absolutely. Rohit, thank you so much for taking the time and for speaking to us. Season's greetings to you and all the best for the year that is to come.
Be on the show and wish you all a Merry Christmas
All right,
and a
on
Happy
that
New Year.
note, we are slipping into a short break.